Hey guys, welcome to the Armor Report. This is the noon update. Thanks for joining me again now. Hope you joined me this morning at 9 a.m. Got you ready for the trading session. This has been a gap up and go day on the NASDAQ. It's been a kind of bounce around day in the Dow, but it seems more or less markets are really extending a lot higher. So I'm going to get to
call from.
Hey, got to call you back, all right? Or you can try. I think you could try a cell phone. Okay. All right. It's a live trading desk, guys. So bear with me, right? I'm managing my own capital, that of other investors through interactive brokers. You can follow me on Twitter, hashtag Armor Report. You can follow our website, rosenthalcapital.com, where we update what our three model portfolios look like at IB and what our risk on, risk off monitor says. So we start the show off by going over what our big algorithms are saying about the top 5 indexes. Those indexes are the S&P, the Dow, NASDAQ 100, small cap index, and the momentum index. And from there flows everything else. Now, it's really important today to discuss that this is not an all or nothing way of running money. What you're going to find today, I'm going to go over what our portfolio looks like. And you'll, I think, hopefully have a better understanding at the end of this show how to use these 5 big algorithms to help you commit capital at the right time and protect capital at the right time. That's what this show's all about. It's using algorithms to help you manage your portfolio in the stock market. We still do the same fundamental analysis we've always done. I spend most of my day on conference calls, talking to management teams of companies I have an interest in owning, doing research like that, breaking down balance sheets, income statements, and all those types of things. Building a whiteboard of the names we want to own, the themes we want to focus on. But then we use these algorithms to decide how aggressive we want to be at any given time or how conservative. So I've been saying, if you're following this show, and I will continue to say it even today, you may be waiting for me to change what I'm about to say, but I won't. The algorithms on the big indexes still tell us this is a highly volatile situation where there's a lot of risk, and the reward to risk scenario is not appropriate to commit a bunch of capital to the equity market. Sorry. It just isn't. Now, does that mean we don't buy stocks in an up market? No, we do. And I'll go over that in a minute. I titled this episode, Precious Metals, Cannabis, Cybersecurity. I should have actually added the energy stocks, right? There's definitely pockets in the market where our algorithms are telling us the reward to risk ratio is correct and the probabilities are high enough for us to commit capital. And we'll do it on a targeted basis. But when it comes to risk on or risk off, we were risk off at the end of September last year. All through October, November, and December, I counseled you to protect your capital. We outperformed every index last year because of our ability to protect capital. We're underperforming in the first month of 2019. There's 11 months left, guys. Just don't get too hyperventilating about it, okay? We're making some money this month. Market's going up. We're making some money. But we didn't go all in just because the market ripped off the bottom. Our algorithms are designed to smooth out this investment experience. We're not trying to trade investments in or out based on crashes and rips. We're looking to find the right entry point where the reward to risk is appropriate and commit the most amount of capital at that time. And if that scenario is not there, then we commit capital if we want, but at a much smaller degree. We'll make money in a market like this, but we're not trying to outperform on the upside. We're trying to protect capital right now. We're trying to invest appropriately, but protect capital. Statistically speaking, this market will retest that low of December. And I know everyone tells you on TV, not going to happen. I heard one guy today, I don't know what he's drinking. Maybe he's smoking too much cannabis. Maybe that's a problem for him. I don't know. But he's calling for this move in January is the beginning. 2019 is like 2009. The Fed's in our corner. 2018 was like 2008. The market collapsed. Is he out of his mind? The guy's got to be out of his mind. He's just begging to come up with scenarios of why the market should go up. And I understand why he does it, right? He's an analyst at a big investment banking firm. Why does he do it? Because the market goes up 80% of the time. So if he's always coming up with reasons why the market should go up, guess what? Statistically speaking, over his entire career, he's going to be right more than he's going to be wrong. I think it was outlandish what he talked about this morning. I think people were way overreacting to what the Fed said yesterday, and I think they overreacted to what the Fed said last year. And I think the real problem here, the bigger picture, is nobody knows what the Fed's going to do. So we're ripping from pillar to post based on what we think the Fed speak is. That's a dangerous market to invest in. And this is why, not that our algorithms care about what the Fed's saying. They're based more on statistics and probability. But I find it interesting that we're still in a risk-off mode. And I think we're still in risk-off mode. If you look at what's going on, the market's collapsed and have rallied based on what the participants think the Fed is trying to say. So a couple months ago, the Fed hated the market. The market suffered. Now the Fed's come out and said some positive things. So now all of a sudden, some insane fool is talking about how 2019 is like 2009 all over again because the Fed's what? Because the Fed said they'll help the market if there happens to be an economic downturn. That hasn't changed anything about the fact that the Fed is reducing its balance sheet in 2019. They just simply said if the economy grinds to a halt, they'll stop reducing their balance sheet. Okay, who didn't know they were going to do that? So we overshot in the downside on a panic. Now we're overshooting on the upside, and it doesn't change our algorithms. They say this is a dangerous environment. Tread lightly. All right. So what are we doing in our portfolios? We are constantly doing research to uncover oh, look at that one. What a nice move. Our biggest cannabis play is just blowing out right now. It's up 11%. Oh, that's just a beautiful move. I knew that was coming. How much fun. You're just doing the right research in the cannabis space right now is unleashing some unbelievable investment opportunities. Unbelievable. And I wish I could share more with you what this stock is, but I'm still in the process of accumulating it for myself and for the investors that I work with. And so, I can't get into detail about what this stock is. Certainly, if you'd like to be a part of what we're doing, feel free to call me. I can talk to you one-on-one, see if it's appropriate for you. You can accumulate it with us. But, the stock's blowing out. If you follow my Twitter feed, you can probably figure out what the stock is. I like to post on my Twitter feed anything that's important in the cannabis space. There have been a couple of stories today about companies hiring important people for their management team to really prepare for a major, the major growth that's coming in the next couple of years. And that announcement, which I've been waiting for the last month, and I spoke to management a month ago, they told us they were looking to make this addition. When the announcement hit, I was doubling my position this morning at the open. When the announcement hit, now the stock's up 11%. It's going a lot higher. Anyway, there are gems out there. We can't buy every cannabis stock. You can if you want, but I don't care about that. What I care about is intellectual property. Whenever I'm buying a stock, I want to buy a stock that has intellectual property, creates a moat around it, and creates value. When I say a moat around it, it makes it hard for other companies to compete. I don't care about PE ratios. I care about IP in a company. So what we're doing is we're buying the cannabis companies that are building intellectual property. And so is, by the way, big institutions out there like Constellation Brands and Altria. So if you want an example of what I mean, look no further than Canopy and Kronos. These two companies have had billions of dollars put into their coffers from big industry heavyweights because of their intellectual property. So it's our job now as investors. Yes, we can own those names. And I own those names through the ETF MJ. Okay? So step one, own the ETF MJ. It's a great way to get exposure to the space. But step 2 through 5 is to do your own research and find cannabis companies that have intellectual property. I don't have an interest in buying growers. That's a commodity business. I don't have an interest in buying companies, for instance, that are rolling out medical dispensaries. There's no barrier to entry. Anybody can do that. It's not that the stocks won't go up in the short term, but I'm looking for, look, we're at the very beginning of an investing super cycle for cannabis companies. I'm setting up investments I expect to have for 3 to 5 to 10 years. And I'm going to make my second fortune on this investment theme. Investing is all about opportunity cost of money. You only have so much money. Where do you want to invest it? I want to invest it in assets that I think can go up 10 times in 5 years. This is why I don't have much of an interest in buying semiconductor companies unless they have IP that nobody has access to. Otherwise, what you get caught in is a cycle. The stocks can rip higher and then they collapse, and they rip higher and then they collapse. And you get 10 years out, and where's your 10 plus fold move that's increased your net worth in a meaningful way so that you've made your second fortune? It's not there. So you have to trade it correctly. And I'm not saying you can't do that. Be my guest. But for my investing capital, I'm looking for intellectual property. Oh, geez. Oh, the stock is just ripping higher. Oh, it's so much fun. That's why I love this business. When you do research and you get it right and you step on the asset right and you really put it in the portfolio, when others come to it and recognize you're correct, when you get paid, it's the greatest feeling ever. But what's an even better feeling is looking at this investment that I just started building a month ago, 5 years from now. 5 years from now. My second fortune I'll have built. And I'll build it for myself and for the investors I work with. Okay. So that's the cannabis space. Focus on IP when you're doing your research. Going back to our bigger algorithms, because we're not in a total risk-on environment in our estimation using our algorithms, I don't even have a full complement of my cannabis investments. I have a third of my overall, a half to a third, depending on the account, of my cannabis investment. So I'm making money right now, and that's great. Market's blowing out. Sounds good. But whenever we have that retest for the whole market and for this group, and I'm sure this group's going to take a break and come back down. And when it does, I'll be adding to the positions on weakness, and I'll finish them off when we get a risk on buy signal for all of our big algorithms. That's when I'll finish off my position. So I'm going to find investment themes and stocks that I like, and I'll have a third to a half of my position size on now. because our bigger algorithms are telling us be cautious. The algorithms don't tell us where the market will go on a retest. So this market could extend higher for another 5% and then come back and retest to these levels that we're at now, and we'll get a risk on buy signal and it'll be full on. Great. Or this market could be peaking right now and it could crater down to the lows of December and we'll have protected capital. See what I'm saying? So we're willing to put some capital to work. We're doing our research. We find our favorite names. Have you guys figured out what I'm talking about? Because now the stock is up 13%. Are you buying my stock? Anyway, I digress. I have a little bit of fun with you. But what I'm saying is, even though we're making money right here, we've only committed a third to a half of the amount of capital we would commit if we had risk on across the board in our big indexes. Okay, that's how we use those algorithms. They temper our enthusiasm at times like this. We'll still make some money, but we're carrying a lot of cash. Okay, precious metals. Let's get to it. Guys, I've been telling you for over a month now, we have a multi-year downtrend that was broken in the precious metals and in the mining companies. We've been buying GDX, GDXJ, CEF, which is the exchange traded fund, central fund of Canada that owns gold and silver bullion. We have our full complement of that position in every account. We did that a couple weeks ago. That's an example where the algorithm said the reward, if we're right, is worth the risk we're taking, and the probabilities that we're going to see higher prices is extremely high. So we commit the maximum amount of capital we're willing to commit. And we did that a couple weeks ago, and it's been blowing out. The last 5 days have been unreal. Let's add a piece to the puzzle. Typically, over the last 7 years, every single Fed meeting has resulted in a destruction of the price of gold and silver and the mining companies, with very little exception. At a Fed meeting yesterday, these stocks blew out, and these stocks ran up into the meeting. They're changing their spots. They're changing the way they behave. And that is a further hoof print. You've heard me talk about bear paws. That's a hoof print of a bull market in gold and silver in the mining companies. So we stay committed there. We're enjoying real success there. We're not selling any of that position. Cybersecurity names. I love them. CyberArk's breaking out. There's a lot of little small cybersecurity names, different ways to play it. If you don't want to focus on a CyberArk or a Fortinet, I get it. I mean, there's so many of them and it's hard to keep track. There's some good ETFs out there. Hack is one of them, although Hack has a lot of Cisco and other names in there. And I also like FFTY. This is the Investors Business Daily Innovator 50 Index. And in that index, if you go look, you can use ETF.com as your guide towards understanding exchange traded funds. It'll tell you everything you need to know about any ETF you have an interest in. You'll see that inside FFTY are a lot of these great cybersecurity stocks. That's one way I like to play it. All right, guys, I got to go. This is important. I'll talk to you tomorrow.
Call from is the Rochester
Thanks.
Road.
Thanks for being with me.